Okay, this is the second video lesson. I have in front of me a level 2 snapshot after hours. It may not be completely correct. Um, may have been some MM flopping around after hours. But the point is that it's right now 2 by 3. The high today was 4. So I'll swing this out of the way. Um, this is on ZIPZ. I hesitated doing this one, but I wanted to show you what repeat offenders look like. And when I say repeat offenders, if you look at the company reverse split history, in the last less than 3 years, they've reverse split 3 times, or excuse me, 4 times. The last one in October of 2010. They did a 2001 reverse split. Uh, OTC markets show them with a share structure here, you know, as of December 1st. I highly doubt that's correct, and I'll show you why in a minute. Well, I'll go ahead and show you now. Here's the price action of a level 2 chart for the last couple of months here, okay? Uh, you see it's up here around close to a penny, and it's slowly been declining. And the reason why it was up that high, and even before, is because it was um, reverse split back in October. Here's 3 months. See, it was up to 20 cents. If I go even down further, let's go to a month. You can see about what it's doing now. Uh, this day right here, this candle here, there was 111 million shares traded. And you can see that it went from just like about 8 triple zero 08, triple zero 05, and it closed red on the day, and it's been declining ever since. Right now it's at 3. Okay, so you can see these large volume days. Um, that show, how much is traded. Here's 36 million day and so forth. Okay, enough of that. They've attempted to get their financial statements up to date with OTC markets, um, and they did about 4 of them in a row. And this is the latest one. It's as of September 30th, which was just a few days before their reverse split. And I want to point out some things here. Cash. They've got 9,000 cash. Note receivable. Uh, $757,000. Now that would seem good if they had, you know, say if they did a service company and they bill the client and whatever the client owes them, that's their note receivable, right? Well, not always. Keep in mind current assets is a asset that is usually turned over within a year. If we go down a little bit and we see we have fixed assets, these are assets that are generally longer term in nature, uh, like vehicles, that sort of thing. And you see that they have 1.3 million in fixed assets. Software development in progress. 1.3 million there. Looks like they're developing something and they think it's worth over $1 million. Who's to say? They may be right. And this may be a fine company too, by the way. I don't know these people, and just pointing out what I see here from the document that they provided. Other assets. They've got software license. I guess that's in-house. They're just sitting on a shelf somewhere. Million over $1 million. They've got intangible asset. This is always a good one. This is my favorite to look for in a document, especially for a pink sheet company, to find how much intangible assets they're claiming. They're claiming $1 million in intangible assets, $976,294. This could be goodwill, something that you can't put your finger on. Uh, to me, pink sheet companies, I think they ought to pass a law to where they cannot claim goodwill or an intangible asset to prop up their balance sheet. Because what that does is it shows that their assets are uh, elevated because of this figure right here. So, and if you go to the basic financial or accounting equation where assets equals liabilities in owner's equity, you'll see that all it does is boost up the equity side because the liabilities are firm. The equity, the retained earnings, this number gets boosted up because this number here gets boosted up. Okay, so it makes the equity portion look better than the liability side. Okay. Anyway, I look at this intangible asset. That's one of the first things I look for in a pink sheet company. Okay, liabilities. They have 3.3 million and 3 point almost 4 million in current liabilities. Bills that are due within a year. Remember, they have 840,000 in current assets to pay for that. We go to equity. At the time, they had 4 billion shares issued. Okay, 4 billion shares issued. Revenue. They had $318 in revenue. Okay, you see a pattern here. Uh, Operating expenses 160. It took them $169,816 to make that $318. Okay. Um, Net loss. Yeah, they had a net loss. And that's probably about it. The cash at the end of the period, they've got $9,000. Okay, probably they sold some stock. But this reverse split history right here, and with their revenue, you know, they're in the business to sell shares. It's plain and simple. Um, you might could flip this for a tick or two, but if something were to come up like a big stock promotion and so forth, they're going to be selling shares. They're converting um, debt to equity. Um, this company may be a fine company, maybe some fine people running this company, but I don't see. Here's some of the latest news. Uh, Looks like they're in the business of iPhone apps, which is generally a pretty hot sector. But you know, they received approval of their fourth iPhone app, yet they've got 300 and something dollars in revenue. I don't see anything here. Um, you know, the main thing I wanted to show you about this whole deal was this intangible asset. That's a flag for me. The reverse split history that we saw on the company information right here. Also, generally speaking, you never really trust um, the shares outstanding here because they're more. I mean, we had a 40 million day a few days ago, and it downticked. You know, so anyway, that's there for you to look at. Again, let me pull up the level 2 snapshot. Uh, just be careful when you trade these kinds of companies. Um, like I said, they may be lovely people, but you know, I would rather try to find something that's a little bit more predictable. Um, Besides going down as the So I hope you got some lessons out of this, um, and I'll probably continue to do a few more of these that I come up on.